All right, peoples, Bruce with Targeted Wealth Creation back at you late evening on March 4th, early morning, March 5th, depends on where you are in the world. All right, let's jump in with Roundhill. They've announced their YBTC along with their three QDTE, XDTE, and RDTE. So let's jump into the analysis for these guys. Let's start, like I usually do, on XDTE at the top. Now, I summed up something in this, I'll call it a box, but this square that I didn't have here before. So I'm going to point that out. But anybody that wants to look at what was paid, 14,2112. So one of the lowest, if not the lowest, well, guess what? It is, well, over here, I'm tracking when did the fund peak? What was the highest price of the fund was at in any of the distributions? Well, that was on 11/15/2024, which by the way matches RDTE. It does not match XDT, sorry, QDTE. So the S&P and the Russell both peaked, if you will, during this week of 11/15. You can go look at a stock chart and see it. And now we've been heading down. We've now hit the low point. Now, since these are distribution, there will always be some NAV reduction. And that's why you look at recovery and you look at other things like, yeah, it pays and it always subtracts out what it pays once a week. But, good stocks, when they're performing in good sectors, recover all that and more. Just go look at your Bitcoin oriented things, right? YBTC, Misty, Coney, that type of things. And then your big good tech stocks, your Nvidias, they recover those things when they're a high income fund. So what is this downdraft made up of? Well, it's made up of from 11/15 to 3/5 so far, right? Very likely we'll have a lower high here in March, or a lower low, I should say. Um, so how many days has this been? Well, it's 110 days or 30% of a year, almost a third of a year, right? And the downdraft's 11, call it 12%. Not horrible. You certainly have bigger downdrafts from peak to trough, right? Um, and then something else I usually do for you guys. So 14, when's the last time we had a 14-cent payer? I don't think we have. Let me scroll down. I looked at this. So in December, we had a 15, and we had many payments in December, but one of the low ones was 15. We had a 15 in the end of October. We had an 11, okay, and a 12. Don't ignore this number. This is all of the payments summed together. But we had an 11-cent back on 6/5. And then this one really shouldn't be highlighted, the 22. I think something was going on, but clearly the 12. So we've had an 11 and a 12, but way back in the earlier days, right? We had this 12 and the second payment back in April last year. And then, so looking at that, this can be useful, right? That's what I say. Well, clearly, we're in what I deem bear market territory or a downdraft um, phenomena going on. Let's look at QDTE. Because of some of the high flyers and big tech, QDTE sort of beats to its own drum. So what is its time frame? All right, so here's the payment if anybody wants to know. I'll come back to 15 cents. Okay, down certainly, yielding 21. What did we yield on the S&P 500 one? 15% yield, right? So this one tends to pay more, but look at what a good payment yields you, 35%. We had some at the end of the year when they paid out extra, you had some big payments, right? Which yield, and these are annualized, right? You take this number and do 52 weeks to find your yield. Now, um, on QDTE, since we paid 15, here's another 15 in December, kind of matches QD RD XDTE above, and we had a 14 back on 6.5. So that part's very similar of June of last year. Now there was a low payment down here on the second payment, but we don't have that in QDTE. All right, guys. So that's what your payment is, 15. What's the length of time that QDT, though, from peak to trough? Well, its peak was back on 612. If you let's look at the price high, in other words, when it reported, we always show the weekly number, right? We show the price when it declares. Well, the week when it declared that was the highest, the maximum value in all the weeklies, 45.75, June 12th. The low is right now, right? And all you have to do is look at this red over here. Now, this had some green in it. Look at QDTE or XDTE. Yeah, all right, 2, 2, 2. I guess it's RDTE that's just clustered with a whole bunch of red lately. Um, but looking at this, 8.81 drop. Now, ironically, that's exactly this. Well, no, I take it back. Six. I think RDT has an 8.81, but it's a different percentage because the price is different. So the downdraft on the QDTE much longer, 72% of the year. So if you look at it, is it going to ever get appreciation, or is it just some NAV reduction and you hope that the payment yield is greater, which so far is kind of true. But we'll look at that when we're finished. You know how we sum up everything and show you total return. All right. So 72.88. Let's take a look at RDTE. 14. Let's see. There are no other payments anywhere near that low. The 19 appears to be, now remember, this fund is a shorter time frame. The XDTE and the QDTE, the S&P 500 and the NDX or QQQ, whatever you want to refer to it as, that has a year almost perfectly. They came out on 3/7. This didn't come out until 9, well, it reported on 9/25, so it came out, only a week or so before. So this was a September of 2024 launch. The other two funds were March of 2024 launches. So this has a shorter history and time frame. So let's take a look at those. So there are no low payments like that before. The lowest I'm seeing is a 25. There's a 24 in there back on 10. Oh, there's so yeah, the last two payment. Well, you have one here. So you have a 20, and then you hit 20 again, and you hit 19. So look at the dates, very similar to XDT at the top. 111 days, 30%. What was the time frame for them? 110 days. So very, very similar. 19% though. 11 there. Sorry guys. Okay, 11 on the drop, 19 over a longer period of time. And then we have a 19 here. This should be red just to further emphasize that. Why aren't you giving me what I want here? Okay. But the same 30, it's a 30% drop. And this with 19. No, that is the percentage of the drop. What was I looking for? Really the time frame, right? So this 19% is over 266 days. This 19% is over a much shorter period of time. So when RDTE, and it's very typically, these sector movements or rotation, like I'm going to get out of the S&P and I'm going to go with the smaller cap, they're more sensitive when you get into an RDTE and the Russell, the rut. You're getting into a smaller class of company that's a little bit more interest sensitive, right? Their borrowing costs them more because they're not borrowing at the same amount of money. They're typically smaller cap companies, hence the Russell 2000. So that is interesting on the sector movement. Now look at their downdraft. 5 of the last 6 weeks. Okay, you don't see that. 5 of the last 6 weeks have been down weeks. Okay, you see it here in QDTE, but in an earlier time frame, right? They've had 3 out of the last 5 up, and 3 out of the last 6 they're even. Not here. You've got 5 out of the 6 in a downdraft. Let's look at QDTE, XDTE, sorry. So they're 4 of the 6. Okay, so 2/3 of the time frame XDTE weekly have dropped. And then, you can get into the percentage of the drop and so forth. All right, let's look at the summary on this stuff, guys. This always tells us a lot. So here's your XDTE, QDT, and RDTE. Again, the 3-7 times frames here. So here's your inception price at launch. So you take your $1,000 and here's the current price versus the inception price. So all you got to do is say, hey, 10% down, 20% down, right? Do you make it up in the dividend yield? Not quite, close. So the annualized dividend yield is 24.05 and it's dropping 10%. This guy's would need to be 34.05 to handle a little bit more than that. It would be mid 34s to handle the bigger drop. So you're dropping in value at a bigger percent. And these are both over the exact same time frame. This is not good for the Russell, but then the Russell was beating all these. If you guys remember when it was young, in December and January, when it had 3 or 4 months, it was simply their dividend is still fantastic, right? It's still running at 35% because after this period of time. So what is the total return? 13, 12, and 10. Call it 14, 12, and 11. So again, some people, I always say to you, when this is 1 percentage point, if you want to own more QDT than XDT because you're not sure going forward, you make a little more money along the way. They're giving you the money every week, more pennies, right? So if you're spending that or reinvesting, that's an interesting phenomenon. But actual total return, if you're not reinvesting, you make more money with the underlying value and the yield percentage. All right, guys, XPay is nothing new at the moment. The other one to look at is YBTC. And up here, I updated a couple things. Number one, let's look at the declaration. Whoops, I had this, and sorry guys, I changed that and then it went back to the same. So I need to go get that. That number is 0.24. 0.244223. Why does that change on me? All right. So look at this on YBTC, the volatility of crypto. That is 1, 2, 3, 4, 5, 6. The blue is since YBTC went weekly. Okay. So it's had a lower payment. I mean, we're higher this week than we were last week. But look at the downdraft last week. 3.6. This is the value in YBTC. So when you add this up, and I think did I do my drop analysis and so forth? Maybe I didn't because I've got this other analysis. I should really do that. Obviously, since this thing started in January, it was, and these, all the whites are monthlies where they were paying once a month. So it's been 47. Here's a 45. Here's a 44. So it's looking like our low was 44 until it came out here. What about a peak? It's looking like January 15th or January 7th. 50, no, no, here's 53. Anyway, I'll do a formula in there. Max for high and min for low, but that's all right. I'll put that in there later. This doesn't have the length of history. Up here will tell us a lot, peoples. So I've always shown you YBIT, right? You want to look at another company as an income fund. You look at IBIT from BlackRock as the base BTC ETF, but it has no distributions. But hey, that's okay. So you don't add up any. So that's kind of the gold standard. And you'll notice that YBIT has gone to using that. It used to use BITO, which decays a lot in its NAV, like YBIT and like YBTC, right? But it's still running off the futures market. Well, IBIT does that, but IBIT isn't paying anything. But let me ask you a question. So if over the last year, again, this always comes down to your personal preference. So if you want dividend income and you need that income and you don't want to wait for growth, then you go out and you buy a YBTC because but your gain and loss since inception, okay? And I annualize this number, right? Even though it's 412 days, I make it for 365. And I say, with the dividend annualized and so forth, I got a negative 12%. Okay. On YBIT, it just got killed. It's at least getting better. If you look at a chart of YBIT, since they switched to IBIT, they've somewhat stabilized. I wouldn't own it. I wouldn't choose it. And honestly, you got volatility like crazy. But if you see a super high run and you're in a growth stock, just maybe take it off the table. Yeah, you got capital gains, but I don't understand when you get to the point where your total return. Now, when I said the gain or loss is negative, yeah, the gain or loss is, but when I add all the dividend, so if I need income and I own YBTC over the last year, I'm at 36.59 total return. Okay. My stock value is down 12%, 12 and a half. But with all those payments, I got 49.16 with what I paid over here. So you see inception price and current price. Look at this guy. Where did the money come from? Inception price 23.34. Current price 49.39. So you got 100. You tripled this guy. Actually, this would be what, 108 if that was tripled. 90, 118, 119. No, 109 and a half. Yeah. So you've tripled your return. And this doesn't even see, this is just dumb money. This is just dumb money. That's all I can say about that using this particular tool. Now, is it trending better? Yes, it is. Which brings me, I'm going to give you this summary and then I'm going to go back and tell you a couple of things. All right. So on Roundhill, you see the 24, you see what's happening with YBTC, and then this is all of your summed up data. Well, one of the things, guys, that you want to look at here is I've been guilty of this. I've been beating up on Defiance. A couple of times people said, Bruce, why even bother to do a video? It's like by far my lowest views when I show you the weekly Defiance update. Well, guys, I still do them. I just wasn't doing the video. They've been stabilizing and they've been doing pretty good over the last 3 weeks. So I'm going to do a video after I get Defiance, okay, and now I'll have Roundhill, and then I'll show you the new SDTY, QDTY. They don't have an RDTY yet that's launched. They have it, they just haven't started trading it. So Yielmax is doing, I've already done the work. I'm just not prepared to show you until I update some numbers. But that one is interesting when we look at who is winning the battle, right? Who's the best for the period of time. Um, so just like I do here, right? And some of the other stuff. All right, guys, that's what I got for you. So, the weeklies are interesting. Roundhill has been king of the hill, no pun intended. But I tell you, Defiance is coming back. And I think Yieldmax will give people a run for the money with the zero DTE. Okay. I think it'll just be interesting. And that is something that, as volatile as these markets are, you're safer in these S&P 500. Now, I say that with a grain of salt because look at what happened yesterday. Early, we had a downdraft. I mean, I'm in UVIX, right, which is the volatility index at 2x, and that thing just flew. I was up like 20% early morning. I was up on UVIX to like 44. I looked an hour into the market, said 42. It closed at 36. Why? And what happens with the VIX? It's the fear index. So as the market bleeds, well, when the Nasdaq and the S&P were down, it was that UVIX was really up. So I'm trying to sell some calls out in the future because I can get almost my complete value that I have in the stock. I was trying to write a September UVIX, 57, and the stock's trading at 44. And I wasn't that far from when I was trying to get $30. And I'm only into my UVIX at around $30 in this particular batch. And it's still at 36, but I'm greedy. I want to sell it out when the fear is the worst, have it plummet, keep all that money, hold the underlying, and next time, almost like a wheel, but in the case of the VIX, it doesn't do well until, but I think this 2025 is going to be volatile. I think March will be down, maybe into April. We probably recover and go back. We're due for a bounce right here. We hit some levels, and so what I meant to say to you guys is the SPY, the S&P 500, it stayed down for the day. The Dow was ugly. The S&P 500 was ugly. The Nasdaq recovered a lot. So did a little bit of crypto. Crypto was still down, but it came back from where it was on its lows. So the market is very dynamic. You guys out there that are just borrowing like crazy and dumping into these super high yield, single stocks, I fear for you. Been there, done that, right? Not with them, but in previous times, 15, 20 years ago in the markets when I was playing the precious metals. I got overindulged, but I did it more in the futures market where, I couldn't even sleep at times because I was having days where I was having $250,000 account change, right? I'm up 250 and one day I'm down 150 the next. And my salary was only in those ranges, right? I shouldn't say salary compensation because it was sales and base salaries. But when your value in the markets changes one day when you're relatively high earnings and your career is involved and you can't sleep, it's not a good thing. If you can't sleep, that means you have too much money in the market. Honestly, you're taking too much risk with that money. All right, guys, that's what I got for you. A little wisdom and a little rant. All right, guys, Bruce with Targeted Wealth Creation, not financial advice. I'm not a financial advisor. Have a good one. Bye for now.